last year when we were here for this conference, I think there was an overwhelmingly negative view about Brazil. People were still a little bit positive that growth was going to turn in the latter half of the year. And when that didn't materialize, people got extremely bearish. And it's the most bearish I've ever seen people on Brazil. So towards the end of last year, the fourth quarter, when the growth didn't materialize and the fiscal numbers kept getting worse and worse, bond prices started to collapse. And I think one of the things that people have to focus on in Brazil is you have this less liquid bond market that people are selling into. And what happened, and this is part of the downgrade story, is as Brazilian bonds got downgraded from investment grade to high yield, they were sold from a much larger investor universe into a much smaller investor universe. And so that requires a bigger move in pricing. And so towards the fourth quarter last year, I think the trough was probably sometime in January this year. We've seen a substantial rebound, but that rebound has really been focused on the better quality credits within Brazil. So triple B and double B names in Brazil have fared very differently. The names that are still triple B are trading at pretty aggressive rates, whereas the double B names are kind of near fair price. They're still pretty cheap, but single B names in Brazil are absolutely for sale. So that's been the fundamental story of Brazil. Is you've seen a kind of, in the triple B space, you saw things fall and then rebound a little bit. The double Bs have rebounded to a certain extent, but you've really seen no rebound in the single B space. And so I think that's what Brazil is coming to terms with right now. Is this is a temporarily investment grade country that's now evolved into a high yield country, and it takes the investor universe as well as the issuer universe time to adjust to that. But the reality that Brazil is facing right now is this is a pretty single B economy. So the issue that Brazil faces with raising capital is one of crowding out. And I think investors in emerging markets are less familiar with the crowding out story than they used to be. It used to be that big issuers on the sovereign side would crowd out all the corporates. So back in the late 90s, early 2000s, when countries were running higher fiscal deficits, the sovereigns would have to borrow. And that meant that the corporates didn't have access to market. As sovereign fiscal deficits declined, corporates had greater access to capital. And what you saw in Brazil as a result of that is just a ton of new corporate borrowers. And so I think the reality is that there are fewer corporate borrowers that are going to have access to market from Brazil. So if the universe was, well over 100, the companies that are going to be able to come to market are those like Petrobras that have to. And that's going to crowd out a lot of the lesser quality credits. So I think one of the main things that needs to happen is they need to figure out how to address a larger investor base. The large investor base is really on the high grade side. As a high yield borrower, Brazil and Brazilian companies are going to be hard pressed to find it. And only the kind of those most in need are going to be able to have access to the market. So I think that's one thing. I think the big thing that Brazil needs to do, though, is some form of regulation of local interest rates. They need to open up the interest rate market, because the problem that Brazil has is local interest rates north of 14%, which is where they are today, created a perverse allocation mechanism within the economy. And that crowds out everybody, because nobody's going to lend money to a corporate at any rate when they can park money overnight at 14%. So I think going forward, it's hard to figure out. We're at a major turning point in Brazil where you could have an economy that, if you had a good caretaker government come in, you get rid of Dilma, new government comes in, and the guy has a meaningful coalition behind him. And that's the problem that Brazil has, is it's a very fragmented economy, or very fragmented legislative process. Nobody has over 20% of the legislature. How are you going to put together this 60% force that you need to have to pass meaningful structural reforms? And it's just going to be incredibly difficult. And the structural reforms that need to happen need to be liberalization of the local interest rate environment. You need to have, I think BNDES needs to spearhead a genuine development effort. BNDES has been a development bank that spends most of their time lending to the most developed companies in the market. A real lending effort where they were, finding things that actually promoted development. And I think a national infrastructure program, that would actually create potential issuers in the market, but issuers that were doing something that Brazil needs, putting people to work creating growth, creating a more kind of viable economy. It's been 20 years that people have been saying Brazil needs infrastructural development, and not much has happened in that time. Well, I think the quasi-sovereign space in Brazil is largely garbage. Um, I think that there's points at which it has value, but I think that you have to stay away from names like Eletrobras. It's fundamentals of credit tell you that these companies are not, at the most basic elements, really great companies. Petrobras has an extremely high cost structure that's only driven higher by the fact that they have a ton of debt. So they have $160 billion in debt, and that materially increases the cost of doing business. Add to that it's not a well-managed company, hasn't historically been a well-managed company, and a lot of that debt has been raised for projects that aren't coming to the fore. So I think the quasi space I would avoid. The market seems to be largely in love with the sovereign. The market's very forgiving of the sovereign. It hadn't really sold off as aggressively as it probably should. And I think people are having a difficult time coming to terms with what rating the Brazilian sovereign really deserves. I think that if you look at the sovereign and then start lumping in quasi-sovereign exposure and say Brazil steps in and takes over Eletrobras or assumes responsibility for Eletrobras's debt, does the same for Petrobras, the next domino to fall is BNDES, which is a huge portion of GDP. So as Brazil does this and the government backstops these quasi-sovereign entities, the level of indebtedness of the government rises dramatically. And so in the case of Petrobras, you're talking about 10% of GDP, more than 10% of GDP. In the case of BNDES, you're talking about more than double that. So you have an economy that could rapidly tack 30 to 35% of GDP onto its debt burden through guarantees, and it may be something that the market demands. So I think the real place where the rubber meets the road in emerging markets is corporate credit analysis. And looking at Brazil, there's some high quality companies that have distinct competitive advantages and good margins. And I think right now what I would be looking for is if I could pick apart companies that had strong local cost structures and didn't have a ton of dollar debt, but had some form of dollar revenue, that would be what I would be orienting myself towards. And so you have companies like, companies that have dollar cost structures are severely imperiled by the trajectory of the real lately. So I think you have your good and your bad, and then you have stories where companies have changed dramatically over the last couple of years. And some of the best steel companies in the world, Brazil was home to some of the best steel companies in the world 10 years ago. Today, several of those steel companies levered up at the top of the cycle and are not really worth looking at. There are other companies that were big companies and global champions, and it's a testament to Brazil's kind of evolution over the last decade that they had these big companies. Vale is a great example of one, but they've got a lot of hard work to do because they produce a low value added commodity. And so I think we've got to figure out where they come out in the cycle. That said, they have a great balance sheet with very long-term liabilities. And you can pick through the credits. Credit analysis is easy. The hard part of evaluating Brazil today is what's going to happen on the political front. I think the investment community is always overly optimistic on Brazil, and Brazilians are always willing to kind of support that story. I think for the first time in a long time, I've seen the local market less enthusiastic about itself than the foreign market. But I think the reality is what we're going to see out of Brazil, first of all, take a big step back and look at the world. We're in a low growth environment. The world is not growing quickly. The United States is not growing quickly. Europe is not growing. So for Brazil to turn the corner in that context is a little bit harder because there's less of a tailwind. You don't have the U.S. kind of consumer demand lifting Brazil out. You don't have Chinese consumer demand, and principally that's what it is, Chinese consumer demand. But you've got China softening in an environment where Brazil is a massive producer of commodities for China. So I think the investment community is pretty bullish with the idea that Brazil is going to come out of a funk and resume growth. And the history of Brazil is one of relatively low growth for an emerging economy. If you look back prior to 2005, you would wonder how could Brazil be considered a giant of the emerging economies when it grew at such a low rate. And then it hit this kind of high growth rate. But I don't think you can expect it to get back there. I think we're going to be globally in a low growth environment, and that's not going to benefit Brazil. But, how do you interpret Brazil? Brazil has been in a recession for 3 years. By the end of this, the most optimistic expectation is 3 years of negative GDP growth, which is devastating. So I think for the investment community to be haircutting Brazil as a double B credit is pretty aggressive. It's pretty single B.